Hi, this is Lara with your end of the week video analysis for the gold cash market for the trading week ending Friday the 15th of June. A new low below 1282.20 on Friday with some very strong downward movement invalidated the main daily Elliott wave count and confirmed the alternate daily Elliott wave count. If we get some more downward movement on Monday, Tuesday, the target may be as close as about 1273, but if that's wrong, it might not be low enough. There should be, however, very strong support not too far below that at the lower black 2-4 trend line, which might actually be the best way to figure out when downward movement may be over. For the short term, the picture does still look reasonably bearish. There is a downward trend in place. However, volume still strongly suggests that this downward movement may still be another false breakout and it may be completely reversed, but it doesn't look like it's quite done yet. Elliott wave analysis first, classic analysis last this week. This is still the main wave count. It still expects that cycle B is unfolding as a single zigzag. I have 4 other wave counts at the weekly chart level and at the start of every Lara's weekly and every daily report for daily members for gold analysis. I link back to a historic analysis where I show you all of those 5 weekly charts. On those weekly charts, I've made a notation if there are any problems with the wave count so that you can compare and contrast all 5. This is the preferred wave count. It has the most support from classic technical analysis and it has a pretty good fit in terms of Elliott wave. The only problem with it is we're trying to see this upward wave here as a 5 and you have to admit it does look best as a 3. If cycle B is a single zigzag, it's subdividing 5, 3, 5 and all of the overlapping within primary C strongly suggests an ending diagonal. We may have an ending expanding diagonal completing here with a zigzag for 1 and 2 and 3 is longer than 1 and 4 is longer than 2. We need a zigzag for 5 to be longer than 3 so that the rule regarding wavelengths for expanding diagonals is met, and so 5 has to end above this price point. Within diagonals, particularly ending diagonals, all of the subwaves may only subdivide as zigzags. That's why I'm labelling them all A, B, C. They should be zigzags. Within intermediate wave 5, it must be a zigzag subdividing 5, 3, 5. Minor wave B, if it moves lower, and I think it will early next week, Monday, Tuesday, it should find very strong support at this lower black 2-4 trend line. That's because diagonals, just like triangles, should adhere very well to their trend lines. Occasionally there are some overshoots, so it can be overshot. There is precedent here this week and this week to the downside, and so an overshoot of this trend line does not mean this wave count should be discarded. Only if we see substantial movement below this trend line would I then discard this wave count in favour of the very bearish alternate. And so this wave count might possibly be discarded prior to final invalidation or at least switched over to an alternate. Within the zigzag of intermediate wave 5, minor wave B may not move beyond the start of A, not even a tiny fraction at any time frame. If we see a new low, even on a tick chart, by a tiny fraction below 1236.54, this wave count will be firmly discarded, it will be invalid, and then I will have confidence in that very, very bearish wave count. And so that's the nice thing about Elliott wave. This invalidation point is absolutely black and white, and it's beyond this price point we will have some confidence in that very bearish outlook. Prior to that, let us expect strong support at this trend line, or around about that point. Let us expect a little bit more downward movement to start next week and find support about this point. Let's look now at the daily chart with the end of minor A. Is this high up here? So a new low below this point tells us obviously that minor B can't have been over there. Minor B is continuing lower as a double zigzag, 535X, 535. At this low here for Friday's low, minor wave B would exhibit within minute y a nice Fibonacci ratio between minuet waves A and C. C would be very, very close to 0.382, the length of A, if it was over at this low. On bar chart data, we've got a somewhat long lower wick, but on stock charts data, there is no long lower wick. And so I'm going to go with stock charts data and expect that the lack of a long lower wick and very, very strong volume for Friday's downward day points to more downward movement. When I look at the subdivisions of this downward movement on lower time frames, and I've gone down to the 5-minute chart level, it does also look like we need a final fifth wave down within minuet wave C to complete it. And so my target in the first instance is 1273. If that's wrong, it's going to be not low enough because it would see minor B fall short of this black trend line, and this trend line may very well be tested again. Now, like I said, at the weekly chart level, there has been precedent before for a couple of weeks in a row. This trend line has been overshot. It could be overshot a little bit. If we see a full daily candlestick below and not touching this trend line, and if we also see downward movement showing an increase in downward momentum and has support from volume, then I will discard this wave count. And so it's very, very close to the point now where there's very little room now for downward movement to continue. Minor B may not move beyond the start of A. This is the final price point which would invalidate this wave count. While this wave count remains valid, it will still be the preferred wave count. We may have a lot of confidence that we have a low in place now if we see a new high above 1308.89. That's this high up here, because a new high above this point could not be a second wave correction within minuet wave C. At that stage, minuet wave C would have to be over, and we would have confidence we would have a low in place. We would also want to look for a new high closing above the upper edge of the resistance zone here, which is at 1310 on an upward day with support from volume. If we have that, we will have a classic technical move back up into the big consolidation zone here, and then I would have confidence that this downward breakout would then be false, as they have been before. While we don't have that, let us assume that price can still fall further, and let us look for support at this black trend line early next week. At the hourly chart level, let's just go back to this. Here's the structure of minuet wave C, and I've checked the subdivisions here very carefully on a 5-minute chart. I'm going to label it 1212, a quick 3-4 in here, and now the end of subminuet 3 at the end of Friday's session has a nice close Fibonacci ratio to subminuet 1. A little fourth wave correction, if it's over here, then the fifth wave to reach equality in length with subminuet 1 gives us a target at 1273. But if that target is wrong, it may not be low enough because it would not see minor B reach back down to that black trend line. At the weekly chart level, this is a very bearish wave count. It expects that instead of a zigzag, cycle B may be a flat correction. Flat corrections subdivide 3, 3, 5, and within them the B wave must make a minimum retracement of 90% the length of the A wave. This low here is not at 1079.13 or below, and so we can't label primary B over here. That would violate the Elliott wave rule regarding B waves for flat corrections. So for this idea, primary wave B has to be incomplete. It needs to move lower. It needs to reach 1079.13 or below. And so now looking at the structure of primary B, it itself may be a regular flat correction, subdividing 3, 3, 5. Intermediate wave C has to reach down to this point or below. A target for it is to reach 1.618, the length of intermediate A at 958. This wave count does still require a new low below 1236.54. If we see that, then we may have reasonable confidence in this wave count. We may have confidence that we have a downward trend in place, and it's going to probably make new lows below this start down here. The most common type of flat correction is an expanded flat, where they subdivide 3, 3, 5, and the B wave of an expanded flat is 1.05 times the length of the A wave or longer. The B wave of an expanded flat makes a new price extreme beyond the start of the A wave. Here's an excellent example. This is a perfect example of an expanded flat, and they are really common structures. They subdivide 3, 3, 5, and the B wave makes a new price extreme beyond the start of the A wave, and the C wave makes a new price extreme beyond the end of the A wave. Expanded flats are sideways movements in an ever increasing range, the opposite of contracting triangles. That could be what cycle wave B is unfolding as. However, because of problems with this Elliott wave count, we do still need a new low below 1236.54 before we can have reasonable confidence in this. The biggest problem with this wave count is the rarity of a triple zigzag. I'm currently doing some research on gold. I'm doing a wave count right down to the daily chart level going back to the 1970s, and I have only found 3 triple zigzags in that entire time at the daily or weekly or monthly chart level, at all time frames from daily on upward. They are extremely rare structures, and so if this wave count turns out to be correct, this would only be maybe the 4th triple zigzag that I've ever seen, and I haven't seen it on any other markets yet at this stage. And so the rarity of this structure must necessarily reduce the probability of this wave count. And that's the problem with probability. If this wave count does turn out to be correct, the very nature of probability means that if it does turn out to be correct, we will not have expected it as most likely because it has a lower probability. But low probability does not mean it can't happen, and low probability outcomes do sometimes occur. And so if you have confidence with your own analysis in this wave count, then you may like to open a hedge for a short position. You could possibly hedge about this point, and if this wave count turns out to be correct, then you would have an excellent entry point for a short position that you could hold on for the following fall down. That is one possible way to approach the risk to long positions as illustrated by this wave count. At the daily chart level, if cycle B is over here, then intermediate B, if intermediate B is over here, then intermediate C must be a 5-wave structure. So far we may have 1, 2 and 3 beginning, another 1, 2. This wave count now expects an increase in downward momentum as a third wave at 2 degrees begins in earnest to the downside. Within minute wave 3, no second wave correction may move beyond its start above 1308.89. That's another reason why a new high above this point would add so much confidence to that main wave count at this stage. Let's take a look at what happened for some classic technical analysis this week. At the weekly chart level, we have a new low below this point. We have some support from volume for downward movement. However, volume this week is still not as strong as this week here, which was, although technically a downward week, the balance of volume in this week was upward and the candlestick closed green. This upward movement within this week did have more support from volume back here than this downward week has support from volume. Within this consolidation, it is still 2 upward weeks which had support from volume. I have noted before that we had some consolidation here and a false downward breakout. Consolidation here, a false downward breakout, and the clue in both of these instances that the breakout could have been false was that within the prior consolidation movement, strongest volume was for upward weeks. Strongest volume here was for upward weeks. The downward breakout here lasted 2 weeks. And so again, we have to consider the possibility that this downward breakout could again turn out to be false, and volume suggests that we do need to keep that in mind. However, at this stage, price is falling. That is the fact, and ADX now finally tells us that at the weekly chart time frame, we do now have a downward trend. On balance, volume is at support after last week, after Friday's downward movement. This trend line has been tested 4 times, has been held for quite a reasonable amount of time, and doesn't have too steep a slope. So this offers good technical support. This may assist to halt the fall in price. This supports the main Elliott wave count. If we do get more downward movement next week, it may be by not very much and for not very long. And so that target at 1273 or support at the black trend line may be correct, and on balance volume here would suggest that that could be correct. ATR is still overall flat, a wee uptick for last week, but overall it's been very low and quite flat for quite a long period of time, while price has been essentially in choppy, overlapping, slow upward movement. Looking at this at the weekly chart time frame, we've got a series of higher highs and higher lows. And so in order to have real confidence that this downward movement isn't just another pullback with an ongoing overall upward trend, we really do need to see a new low below this point. A lower low would, by definition, tell us that we may have a high in place and we may have a new downward trend. For the longer term, that is. For the short term, we do have at least a downward trend in place, but we're not sure how long or what degree of trend that is going to be. The Stochastics is oversold. At this stage does not exhibit bullish divergence with price. There is actually a little bit of bullish divergence at the weekly chart level between price and on-balance volume. So on-balance volume is actually pretty bullish. Overall, this chart actually looks reasonably bearish, with the exception of volume and on-balance volume. And I will give on-balance volume quite a lot of weight in my analysis, and I know that this downward movement must have been testing members' patience because the main wave count did not expect it. A lower probability alternate turned out to be correct. That doesn't mean that we have to be in a new huge bearish trend. We need to see a new low below that point before we can have confidence in that idea. At the daily chart level, a very, very, very strong downward day for Friday comes with quite a strong increase in volume. This may be a selling climax. In my experience, though, here's another good example. Strong days ending on volume spikes as blow-off tops or to the downside selling climaxes are very rarely the absolute end of that movement. We'll often see a few more days of slowing movement in the same direction before a price extreme is found. And so with the selling climax for Friday, I would expect 1, 2 or 3 more days of slowing downward movement before price finds its low and then turns around. And once that happens, the strength of upward movement should start to tell us if we have a real low in place or just another counter trend movement before an ongoing downward trend. On balance volume gave us a bullish signal here. It's moved back below this line, did not offer any resistance. That bullish signal after Friday's movement was quite clearly negated. Now on balance volume is nearing support. This line is short held, but it's very close to horizontal. It's been tested 4 times before, so this has reasonable technical significance. On balance volume has support at the daily chart level and at the weekly chart level. This supports the main Elliott wave count, and I will always give on balance volume a reasonable amount of weight in my analysis. There is now some bullish divergence between price and RSI. Price made new lows, RSI didn't manage to make it, which tells us could be some weakness within downward movement despite strong volume. Stochastics now has quadruple and very, very strong bullish divergence with price. Those two also support the main Elliott wave count. But ADX tells us we have a downward trend in place. We definitely do. Price is falling quite strongly. And the complete absence of a long lower wick for Friday's candlestick tells me to expect more downward movement Monday, Tuesday, Wednesday as very likely. MACD not quite giving a crossover yet. The lines are sitting on each other, so I'm going to read that as neutral. That's all from me with your gold analysis this week. I hope all our members are having an awesome weekend.